guys. I'm back with John and Douglas of Stable Insurance. Thank you for tuning into the Attachment Point News Roundtable. Thank you guys for causing trouble on LinkedIn and helping instigate this. We may or may not be referring to InsurTech New York and having fun in their comments. Yeah, welcome.
Thanks, Brett, for having us. And I know Tony and David quite well, and we're heading to their conference in a few weeks. So hopefully they can take a little ribbing. Yeah.
They're awesome. I told Tony, and no joke, like I feel like it's them and ITC right now, and then there's other orgs, and but they're doing a phenomenal job at what they're doing, and other people are doing great work as well. But they're leaders in the pack. And John, thanks for letting me talk your ear off ahead of hitting record about actually running an agency and building a business, and why I shouldn't be scared to do it with my own little single shingle.
It's my favorite topic, and no one else wants to talk to me about it. So happy to talk to you about it.
So funny. I know. Hopefully I didn't tell a story last week on the podcast, but it was funny on my one of my last birthdays. It's like, oh, who do you want to have out? And I was like, oh, this friend from Texas, this other person from New York, these people I've never met in person, like all the people we nerd out with all the time, But welcome, guys. And so what is Stable doing? And I heard some people trusted you with a little bit more dry powder, the bank recently. So congrats, get a stay in the game and keep building. That's always good,
Yeah. No, thank you for that. Yeah, we officially announced our seed round yesterday. So this is exclusive to your podcast. You're breaking this news, at least via video now. So we're excited about that. Excited about the partnership that we have to go out and actually start going live with our product. So we've been around for a bit, working to get to the point that we're at right now. We have great insurance partners with a company called ILS Capital Management out of Bermuda and Connecticut here, and then Multiply, which is a really cool organization. In fact, I think Tony had Gloria Campinas on a few months ago from Multiply, talking about what she's working on, and so much fun working with her and her team that she's put together. So we're excited to be out in the market soon, and have great partners and have some money to go out and hire some cool people to work with.
Yeah, it's cool. It's the Mike Tyson thing. Everybody has a plan until, like you said, getting out there. And then you mentioned bringing John on, who owns an agency, who's been in the agency game for quite a while, to be a partner with you. And I think it's really cool that you're bringing in like a seasoned hand to help out. As Tony and Abel Travis would say, it's insurance and technology. You need both. But yeah, welcome, John. And that's really cool. You'd been an advisor and you made the plunge. That's a big compliment, to lock in with one of the horses. That's huge.
Yeah. Thanks, Brent. No, I connected with Doug and our third co-founder, Steven, about 3 years ago. And to be brutally honest, I was not interested in commercial auto at all. Haven't been an agent long enough. I knew that was like the third rail of insurance, rates are just keep kicking up. And I didn't realize the type of innovation that was happening kind of in the background. And Doug, what I loved about the message from Doug was that he was solving a problem that he personally struggled with. Like, he owned a fleet of cars, and I'd love for him to get into that. And he had trouble with insurance. And I think the best innovations in InsurTech come from agents and folks in the insurance space that are solving their own problem. The best tools that I've ever used in this space came from other brokers. And so, Doug told me about the struggle he had with insurance, and he put a plan together to solve it. And here we are today. So it's fantastic.
You gotta love it when a plan comes together, right? Yeah. So what kind of fleet was this? Was this a bunch of rental Ferraris, or what'd you have going on over there?
No, it's funny. We started with 3 really nice Mercedes, and the whole goal was to build kind of like a niched down Uber version in New York that would just do like high-end airport transfers. I was thinking about I would order like a Dial 7 car. I don't know if you guys have been to New York, and I ordered they have like the 777 jingle or whatever. And you pay the $80 to ride in this like 35-year-old black car, and it wasn't that nice of an experience. And then Uber came around, and it was great for a while. I think I was like one of the first 100 users of Uber in New York City. And like I loved, you get a black car for like $50 and it was great going out, it was great going to the airport. And then when UberX came along, I mean, it was absolutely needed, right? There wasn't enough transportation going on from a vehicle standpoint at a certain point in the city and probably around the country. Like everything kind of like boiled down to, hey, it's like a Toyota Camry and not much more than that. So we started with like 3 E-Class Mercedes and quickly realized like we tried to do an employment model that's probably more akin to what like Alto is doing. I don't know if you guys have heard of that. Great company out of Texas that has they figured out what I couldn't figure out at the time, which is like how to hire people correctly, how to like do the logistics of it, and then have it be employee based, which is a completely different risk model than independent contractor based with Uber and Lyft. So I couldn't solve for that, and so ultimately just said, hey, like there's still a really interesting opportunity to rent these vehicles out to rideshare drivers. And so we just find a bunch of Camrys from that point, and like typical driver would have it probably for 2 or 3 months, turn it in, and then move on to whatever else they were doing with their lives. So yeah, that's how we got started. Like I was an attorney, worked at Mercer. So I was in insurance, but I knew nothing about insurance. Like I worked on IP due diligence. So Mercer was on a buying spree when I started working for them. So I worked with our outside counsel a lot on those types of things. I worked on some data security stuff and other contract items within the Mercer legal team. And then just like kind of honed in on this, like I looked at it as like an ROI opportunity. So a friend and I, we got our credit together and started buying vehicles, renting them out. I think we quickly realized that was a very difficult, like running a fleet is not as easy as you thought it would have been. So we'd have people that were leaving vehicles, like not paying us, 2, just like abandoning vehicles. Like one 4th of July, like traveling all the way up to Bridgeport, Connecticut from Brooklyn to get a car. Like I have so many stories about running that fleet. But one thing we realized kind of early on was, there were really good drivers, and we were like, how do we identify those drivers and figure out how to get more of those types of drivers and less of the type that are going to cause us issues? And so around 2015, Uber started making some data available via API. So you could apply for access to this API and say, hey, here's my business use case for trying to get this data. And so we started toying around that from just like a credit modeling perspective. Like, are there ways that we could use that data to identify like a good credit risk? And it helped somewhat. Like we actually had better results, people pay more often that we would put into the vehicles, people abandoning the vehicles less. And then we kind of got to the point with the size of the fleet where outside money started looking at, growing what we had built, a lot of the automated processes. So we were running still with like 2 people and both of us working part-time on it, even at like 35 cars or so. And so, the one thing we could never get around was the insurance. Like that we build these financial models out and there's like the static price of insurance that just went forever into the future. And we didn't have like, our losses weren't developed that, I think we were like 2 years old at the time. So it's not like we had like a loss development that would, hold water, I think from an actuarial standpoint, but it was trending in a very good direction where like it made sense how we were applying risk management to the credit side that also applied to the insurance side. So we talked to the insurance company that we were using, and there's really no interest in trying to use the data. There was interest, but not an ability to actually do it in any meaningful way. And so then at one point I just kind of said, like, this is no longer the problem that's that interesting, like growing this fleet, this asset heavy business model. But I would start talking to other drivers and other fleets about their insurance problems, and quickly realized like this was an issue kind of across at least the New York City space. And then I started doing more research on commercial auto in general, how those models, underwriting models, are being built out, what data, or better, what data is not being used that is available in real time. And then kind of built this thesis around like there should be the ability to do a better job of underwriting and a better job of claims handling that just isn't being done right now. So John talked about our third co-founder, Steven, also not insurance guy. So this was, John joined as an advisor very early. We had some great insurance advisors, but no full-time insurance person. And we spent about 6 months working on the technology, working on the business model a little bit more. And then mid 2019 kind of went out to the market. I started going to like InsurTech conferences, started spending time at Lloyd's. talking to different syndicates. And the response is always like, oh, this is very cool. But where's where's the insurance person? Like, neither of you guys are insurance guys. And then like, here's the other issues we have. Like, you're telling us you want to do a commercial auto program. I don't know if you guys know, commercial auto is not performing that well. Two, you're telling us you want to do it in New York City and New York State, both difficult places to operate from an insurance perspective. And then three, you want to do it in livery. You want to do it in livery and rideshare, which, neither are, there's a lack of data in one and like terrible operating history in the other. So like 3 bullets, you're done. And so we spent like 2 years trying to do that. We just couldn't find the partner that we needed to build out the product the way we wanted to do it. So actually had this interesting thing where the company that we used to get our insurance from, they heard about what we were working on, and like super nice guys, family run organization. They only work in New York City and they primarily do rideshare now, but it's like a former taxi family that kind of moved into the brokerage and then moved to like build their own insurance company. So super cool background. They want to apply technology to what they're doing, but kind of same thing that all incumbent, like massive incumbents are having this problem right now. Like, how do we digitize everything that we have? How do we change like the output of our team? How do we get people to think about things in a different way? And so we had a great conversation with them at one point. And they're like, why don't you guys become brokers? And then we can kind of work together on the product. And so I was telling John earlier, we're telling the story as well. I think we sold our first policy like on February 13th, John, 2020.
Cool.
Yeah, just before Valentine's Day.
Just before Valentine's Day and just before COVID. So not a good time to launch a product in the rideshare space. So we had like a year-long relationship with them that was mired by COVID. But then I think we also just realized that the approach that we wanted to take would take a very long time working with an incumbent, even like a great incumbent like them that wanted to change. There's only so much you can do or force them to do. So we decided that we would circle up again and go out to the market one more time to try and create an MGA. And so we brought Guy Carpenter on to help us with actuarial analysis, great team there on their InsurTech side. But then ultimately found a connection to this company called Multiply, which hadn't even formed at that time. It was still like an idea of the two founders. But Multiply is funded by ILS Capital Management, our reinsurance company, who they've brought on for us. And the whole goal of Multiply, it's almost like the Y Combinator that's needed for InsurTech. We've been in different accelerators and they're great. Like, they help you from a startup perspective, like how to think about fundraising and marketing and all those things. Like, if you're doing an InsurTech, especially a distribution InsurTech, there's like a whole subset of things that are extremely specialized to that, right? Like setting up your MGA, building your insurance product, getting regulatory approval, integrating with technology that does all the dumb stuff you shouldn't have to worry about as a company, right? Your PAS, things like that. And so Multiply has that all figured out, and that's kind of cool. So super cool connection we made with them. They've and this is not a joke, this is not like hyperbole. It would have taken us, even though we've been around for almost 4 years now, in earnest, we started working on this product that we're launching only in the last 6 months. And it would have taken us another 6 to 12 months to get live in the market. Whereas I think we're going to be able to go live within the next 2 to 4 months with the help that Multiply is bringing us.
No, that's an incredible plug, and we'll make sure to throw them in the show notes too for like a little shout out and thank you. They sound like a really cool team. There's a lot of good stuff there. I think selling the policies first, the Sigo guys did that, which was great, to actually see what it is to transact. Like you mentioned, bringing John in, somebody who's kind of got on the paperwork across the desk for a signature, really understands, how the customer's feeling. My best friend put it really well once. It's like, is it as cheap as it can be able to do what it's supposed to do? And then to be in such a gray space like rideshare, even, contributed an article recently for Marble. And even I was screenshotting my notes and running it by a buddy to be like, hey, am I thinking about this right? Am I thinking about that tween time between your policy and them and whose coverage is on? It's an anomaly,
Without throwing any regulators under the bus, we have talked to regulators in states where they're like, we actually don't know. We have this statute that talks about rideshare, but we actually don't know how it operates. it hasn't been tested, right? There is some case law around it, but from a statutory perspective, often it was kind of like shoehorned through a lot of legislatures, and like these DOIs were like, okay, yeah, we'll take this because we want Uber to come into our state. We want this to happen, but we really don't know how it's supposed to operate from a purely like transactional perspective.
Historically, and John's much more seasoned agent than I am, but I have my personal risk and I have my commercial risk. I have my personal assets, I have my commercial assets, my personal liability. What happens when my personal asset becomes a commercial asset and then switches back to a personal asset? And what happens to this business? Are they insuring my personal asset, and are they back just their own coverage? And it's crazy too. We have speed sensors and location. You can't fib these days either. You can tell what's going on under the hood with the car too. There's going to be a little computer in there recording, a lot of your activities. Maybe I should hold on to my 2006 Toyota Matrix. Maybe it won't snitch on me as much as a modern car.
Right.
It can go sideways.
Yeah.
And the truth is, it shouldn't be the client's, role to figure that out, right? It shouldn't be the end user. It shouldn't be the rideshare. It should be the companies that are bringing the insurance to the table. And I think that's why insurance oftentimes gets such a bad rap, because it's a contract that's built on trust, and you never find out if the other side is going to live up to it until it's too late, and the claim occurs. So a lot of what we're doing is around educating our customer base on what our product does and why they need it, and why their exposure is unique to everyone else on the road that's not doing rideshare. And with that education comes the ability to build trust, and also the ability, Brett, we spoke about price earlier. Is our intention is to absolutely be competitive from a pricing standpoint. That's the whole genesis of the way our product is built. But if you can start to establish trust and educate on the whys and the hows, then price does become less important. And I don't want to I want to make assumptions there, but that's the whole goal in our world, right? Is to like sell quality products, not necessarily the most inexpensive, and then let the customer decide.
And if they go a different direction for like a sub-tier risk, and you did your best to inform them, like that's their own prerogative,
That's it.
It doing what it's supposed to do should be the high watermark, and we have E&O for a reason, like you need to be trying to sell good products, and people rightly can get mad at you. Where I think agents will be around for a while is it's just a different relationship, and we're going to build good books of business. The D2C things, there's definitely a place and time for it. My idea was always I wanted like bumper lanes where you can decide like how low coverages can be, or you can like tailor it as an agent for what people might buy. I think that's important. But yeah, the agent's going to be getting meaningful product out for a while, I think. Not going anywhere. That's really cool that you guys built for something that literally, I'm coming up on 8 years of being licensed. I'm still trying to figure out how to digest and communicate things about something like rideshare well. You guys, and it was fun too here to talk about the boxes you checked off in New York, rideshare. It's like, how can we make this the most challenging road to go down? But
I think people thought we were joking, or it was like someone put them on, like a competitor was putting them on, just wasting their time.
That's interesting though. Like there's almost two different ways you can do it. You can go for the hardest possible nut to crack with a big reward, like a state like New York, or to plug our buddies, Marble and Stewart. You can kind of bring this thing that's different. I saw that right away. I was like, oh, honey, but for insurance, and it made sense. I was like, that's worked other places, that should work here. It's sort of like you have to like build the thing people don't know they need, or not be afraid to build a thing that everyone knows is a headache, and a colossal headache, and is not going away,
And that becomes a moat very quickly, right?
Yep.
Because maybe there's still incumbents that are willing to put that amount of time and energy into the space, but there's I think once you kind of have this insta moat that's created, once people will come around and say, hey, I'm going to do this, but then they start looking at the actual amount of work that it's going to take to get through. Like, hey, I can't just throw this product up. I need to go find a partner. And then when I find a partner, I need to deal with the DOI. And then when I do all of that, then like I start collecting money, but then like a claims will happen. And how do I like deal with those types of things? So it's a really nuanced, complex product, even like the most simple insurance product. I feel like Parametric is trying to solve that to some extent, but like that doesn't really happen in auto right now. And so, yeah, there's there's always going to, like, bringing it back to the broker part, or just like maybe even like thinking about like the difficulty of like what we're trying to do. We've definitely, I think we took like the easy way out. We're not going into New York right away now. Like we're hitting the Midwest first. Still a big city, but a city in the Midwest nonetheless. And working with a DOI, I think that's a little bit easier to work with in New York. But we do think about it from a, like, once you, so this problem for rideshare drivers, or just like commercial operators in general, like is probably one of their biggest problems, right? And if we can help them solve that, and we're collecting a lot of data on their use and like how their business is operating, what can we start to do to sell products around that, right? To like become more of a trusted source of, whether it's another financial tool or just an analytics tool or a software tool. There's a lot of interesting ways that this can move, and all, like, as you move through those, you start to build more competitive moats as well. And the way we think about that is, like, at that point you become more competitive against incumbents, which is like, at some point incumbent can decide to eat all of our lunch. Like, they could do that tomorrow if they wanted to, right? For any insurtech, I think even the biggest insurtech like Lemonade, like if somebody really wanted to, they could decide to, like, put Lemonade out of business.
Lemonade picks on all agents, so I won't feel bad picking on them. Be like, you don't want to eat Lemonade's lunch. Lemonade's lunch seems like it have a bunch of little surprises in there for you,
Right. Exactly. So yeah, I mean, like, like, we love to think about solving just like now the hardest problem in general for our customers, and then hopefully that leads to us having the ability to build more trust and like share of wallet with them down the future. You brought Marvel up, like there's fun stuff going on, like what Marvel's doing, which just speeds up some of the things that we want to do. Like, we think about like the ecosystem and building like more of a community base for our drivers to be able to interact back and forth with us and to get value long-term out of the policy. Something like Marvel just makes that super quick to do, right? To build benefit packages and to give value back to customers. So we love the Marvel folks. Stuart's awesome. Audie's our old CTO. So a lot of shit between the company. And a lot of fun to chat with.
That's cool. And you mentioned community. We were talking ahead of time about insurance nerds and how valuable that community is for us insurance professionals solving big problems. If you can get those rideshare folks kind of looped up in a mutually beneficial way. I love like the chaos of an entrepreneur and like a startup guy, because you have like Toggle, which I really respect. I think it was like a farmer spinoff, and they're like, okay, we're going to build renters insurance in like one state in the South. And you're like, screw that, we're gonna do rideshare in New York, let's go. There's like just a chaos sort of trigger. And then you brought in the insurance guy, John, to help kind of bridge it over, and the risk manager and the distribution, understanding too. So, but I love the chaos of that. Screw it, let's go.
Yeah, you kind of shoot for the stars, and then you land somewhere on the moon, So we'll get there someday in New York. We were just having a call this morning about that. But in the meantime, it's all about getting our product out in the customer's hands, in the agent's hands, and growing as quickly as possible.
Well, I have Newport Beach Insurance Center, right? Work out of Costa Mesa. My friend came up with the name. Whenever I'm like cold calling for something, I'll cold call like a peripheral market. So I'll call into like San Bernardino or Riverside. This is kind of random, it's location based, but then I'll be in like Corona, then I'll call North Orange County, and I'll slowly work as I tune my message up to Newport. Same thing, you work in the friendly market, you work in the less competitive market, you work in the one where the hurdles may be lower. You have your end game and where you want to go, but it's just good entrepreneurial kind of instincts to kind of start where it's friendly, Yeah, it's fun.
No, that's exactly right. And I mean, we even think about that on the distribution side of, open brokerage versus, closed brokerage network. And, we're still working through that, but I would love to find 3 to 5 great brokers in Illinois that know the rideshare space, or even if they don't know it, see the opportunity in the market and what mobility is going to look like in the next, 12 months to 72 months, and kind of say, wow, I could be the early one in here, and we could give that agent a tool that's different than anything else on the market right now, and let them run wild with it. And I would love to work. There are times when open brokerage makes sense, but in my mind, I would love to start in Illinois with 3 to 5 agents that can just go gangbusters in the space and truly be unique.
So you're looking for, and hopefully this is okay on recorded line and all that, but are you looking for guys to roll under you to be agents, or are you looking to grab brokers to participate with you guys, or maybe a hybrid? Because we could probably get you 3 to 5 agents, not to be
Yeah, I
overly
mean,
presumptuous, but
listen, we're really close to kind of putting those appointments in place.
cool.
But no, we'd act as an MGA,
Oh, right on. Yeah.
and appoint local agents that know the space well, that either write individual owner operator or write fleets, right? And the exact type of fleet that Doug used to own, of like, 10 to 100 vehicles
Mhm.
that they rent out to rideshare drivers. And we think that space is going to only grow over time. So getting in early and kind of building that expertise and that marketing channel at an agency, we think makes a lot of sense. And we want to support them in that effort.
It's interesting, like the monetization model of, like, shared economy. Think about how much you can rent Airbnb for versus like a mortgage. There's a huge delta in there for somebody who owns the assets and can say, hey, like, for the people are going to help us kind of sub manage this, take these
Yeah.
3
And
houses, run these 3,
Absolutely. We talk about distributed fleets all the time, with that idea of owning 5 cars in 5 different cities that you'll never see.
Yeah, wild.
But earning revenue off of them, right? And just allowing that to happen, because right now there is demand for rideshare vehicles. The issue is on the supply side, right? And one of the major blockers to that supply of people putting their vehicles on these platforms is insurance. Like, how do you even begin to solve that if if your kid's off at college and you got a 3rd car at home, and you want to put it on a platform? It's too much of a headache to figure out. But if someone brings you that solution and then shows you how it would work and how it would operate, like, all right, now you'll have that conversation. And if we can unlock the supply side for these car share platforms, we think that space will grow dramatically.
This is an interesting thing, like kind of bring it back to the value of brokers, and like especially the ones that are very entrepreneurial, that are like wanting to look for new tools to work with. I think a lot of the realizations that we had around car share about how, like, the similarities and the risk between, and having like the way the platforms are created, like on risk versus off risk via the platforms, the data that's generated by the platforms. Like a year ago, we were not thinking about car share, and there's like one specific broker who really helped us like realize, like, hey, like, guys, I'm seeing fleets that are kind of doing both. And then you guys should just start exploring like the lack of supply that's going on with these markets. And you have outside factors like Avis and Hertz selling off a lot of assets because of bankruptcy issues. This idea, we love the idea of distributed fleets, and that's like something that came about because of conversations with a broker that I don't think we would have figured out eventually, I hope, but it might have taken us like 2 years, and by then like somebody else might have already been working on that product. So,
well, that's the bulk shopping or the hub. I always think, like, I don't chase deals as much as I chase like hubs. I chase somebody who could bring me to a lot of opportunities or clusters of opportunities. I used one of those old tricks today and brought pastries on a sales call. I used to bring pastries to like building managers, and then they would refer all their tenants when I was selling office moves. That's cool though. That somebody pointed to the fact that you don't need to sell each individual driver. You can find these like super owners and kind of, start there. That's awesome.
Yeah.
Yeah. And then, I guess as we kind of get into this a little bit, maybe the last thing we mentioned, not being like an overnight success. I'm helping Fineo in the States. We're coming up on 6 years. The guy started in Vancouver in Western Canada, and then over to Toronto, and then launched in the States. It's a journey, 10 years to be an overnight success. When I was at ITC, I felt like we were somewhere in the middle. Like, there's the big dudes with a lot of money at the big booths, and then I felt like there was the smaller ones that were kind of a little bit doe-eyed, lost in the woods a little bit. I was like, we're somewhere in the middle right now. There's something to just surviving some like repetitions too, or surviving some cycles and still being in the game. It's not, entrepreneurship's not a straight path.
No, not at all. Like, and I like we've been lucky, and like everybody that's joined us like has stayed for the most part, and like you've really built that tenacity together as a team, and you've seen like a lot of hardships that take place, but then everybody kind of gets to participate in the wins when they happen as well. But yeah, like building an insurtech is not like anything else. Like not like what I expected either. Like again, like no insurance experience and really no idea of like the amount of difficulty it would take. And like, I think like Steven and I started and we said, like, I think we set like a year for ourselves the first time. And we're coming up on the year, like, well, why don't we extend this 6 months? And then why don't we extend another 6 months? And then I think COVID happened. And we're like, well, why don't we just say because of COVID, we'll do like another year and a half or whatever. And all of a sudden you're like, well, like our wives are rock stars, and John's now as well, just like for putting up with that like bullshit of not having a job, right? Just saying, well, like, give us another 6 months and we'll figure it out. But the same with everybody who's like supported us. So like advisors who came on early, like John is one. When we get to the more weird bit, I'll tell a fun John story about how it took a while to court John, get him on board. Yeah, like everybody's been like so great to and understanding like the patience that's needed. And now I think we're getting to the point where we've gotten really lucky. John talked about us kind of solving our own problem and like the passion that brings within it. And I think we've gotten lucky to find people, whether it's our partners at Multiply or reinsurance partners at ILS or our investment partners now, like they've bought into the passion. And I think you get a little bit more patience from that. And patience is like probably the most underrated thing that's needed to like have some success within this space. Because when you don't get patience.
So I think I might have lost your audio a little bit. I don't know if
Yeah,
I'm still
Doug, I lost you too, Doug.
The only thing I'll kind of, there you go. I think you're back.
I was just gonna say, like, when you don't have patient capital, like, not to pick on a company, but like you do have things that happen where companies go public too early, right?
Yeah.
Because you have the need to like kind of like hit these benchmarks that are somewhat arbitrary and just like investor driven.
Well, and I think that patience and wherewithal and just showing people that you're still around too, it's a little bit like a boxer. You're just hanging in there and you're just waiting, and it's timing. And it's so interesting how even that micro fleet concept, the right relationship or opportunity can change and go overnight. So what was the courting process like with John? It took a minute to bring him in. Were there carbs involved? Did you bring pastries?
Without even knowing it, John ghosted us. So I joined this founders network group that I think I was like looking for an insurance specialist. And so one of the startups was like, well, we have an insurance broker that we work with. And then like a week later, I get this call from somebody whose name is not John, it's James. And James is like, hey, I heard about your company, and I'm interested in learning more and potentially becoming an advisor. And James now is an advisor. James Decker, great guy, super talented, giving us a lot of MGA advice. But unbeknownst to me during this time, like John was the original person that got that call, and John's like, no, screw Otto, like I'm not interested. These guys. But James, why don't you look at this? I'll give it over to you. So his buddy James and brother-in-law, he gave it over to. And so like a year later, maybe 6 months later, John and I finally connect. And I think we had like a 3-hour phone call that first time. Just like we were meant to speak for maybe 45 minutes. James connected us. He's like, hey, you guys really need to talk. Like you really need to talk. Like you're talking about all the same things and you have the same ideas. And so we ended up having like a 3-hour conversation on everything from like, commercial auto, technology we were building, crypto, just like a hodgepodge of things that I love to talk about. And I found out John loves to talk about. And so John becomes an advisor almost from that day.
That's awesome.
I think finally, John, I think it was like when we're like, we didn't really do due diligence for a co-founder, but John's like, yeah, I'm going to disclose something. I'm about to become a co-founder and we work with you guys full time. And I feel like I need to tell you this. Like I originally turned you guys down. I would have nothing.
That's awesome.
And I was like, I don't know how I feel about that, but I've gotten over it since. Yeah.
It's just a deeper relationship at that point, Yeah.
It's
awesome. Yeah. It's cool.
Well, I think a good takeaway of that story, I know we're wrapping up, but it's like there's so many good talented people out there that might have a great idea. And if you put that idea out into the universe now, like people will find you and you can build something that you didn't think was possible by yourself, but you can pull some great people that are thinking the same way you are. In this day and age, you can literally know what people are thinking in real time, through Twitter and social, and you can respond to that and build relationships. It's actually a really incredible time to build companies.
So sneaky good for this. I just talked to a cyber insurance startup before we got on today. I was like, get on Twitter. Like that's a good water cooler insurtech kind of community. And to your point, in my last little thing I'll drop into, I got to work on a kind of API driven project called lifeguard.insure, which the Canopy Connect guys have solved those problems now. But basically passing, personal lines insurance information via APIs, and literally finding info about APIs on Quora led me to connecting with the founder in LA, which led me to writing an article about that startup and then Glad's startup, Bound API. And then people just kept finding that, and projects kept coming just from like writing an article out of a relationship that started on Quora, helping out insurance nerds, being part of that community. So just get out there, mix it up, and it's sort of like a self-filtering process too. Like the people who choose to go to networking events, the people who choose to write these articles, they're going to be self-starters too. So just put yourself in the water with them and,
Yeah.
see what happens. So
I'll give a small plug for Insnerds. It's like early on, like the way I learned, like networked within the community, but also just like learn things, different trends that were going on with insurance in general. You go to the Insnerd Slack channel. There's like, I think there's only one channel around. I think there's a technology channel and an insurtech channel. The insurtech channel is usually like smack talk, which I love. But like all the other stuff is like pure old school insurance.
Yeah.
Like sitting there, for people to digest. So if you are doing if you're like out here listening to this right now and you want to do something in the insurance space, you have no background, as long as it's not competing against us, you should go to Insnerds and check out their content.
I'll plug my buddy Stuart one last time. He said he listened to a bunch of insurance nerds podcasts as he was like on a train to go to his first insurance like conference, while figuring it out for better. So how should people guys follow you? Like, where should they stay updated? Coming to a state near you, how do they stay in touch for when they want to be able to, like when you bring it to California, I'll definitely try to actually build my agency, John, try to get some product out there. But how should people keep track of you guys?
Love that.
Or contact you guys as well?
Yeah, well, so you can check out our website, sign up for our mailing list. We're trying to put more content out right now, not only for our drivers and customers, but just for the the insurance community and the investor community as well. So you can sign up at stableins.com, INS for insurance. And then also we're pretty active definitely on LinkedIn and on my personal Twitter. We're trying to get better about being active on our company pages. And so we'll start pushing some more content out on there as well. But yeah, so check out Stable Insurance's LinkedIn page, its Twitter page, and pretty easy to find. Just Google it, you'll find it.
Cool. I'll have your guys linked in on the show notes as well. We'll have everything up there. But yeah, stay tuned. Stable coming to a state to take care of rideshare folks near you, and we're all in those cars anyway. So you'll sleep better knowing you're properly insured when you're getting driven around.
Yeah, love that plug. Thank you.
So of course, but thanks guys. Thanks for tuning in. We'll catch you next time.
Thank you. Bye-bye.
Thanks, Brett.